We're looking at the Nasdaq composite, CompQ, and must remind everybody this is for educational purposes. Please do your own due diligence. Very similar to the other analysis, so we moved into a sideways channel. This is a little bit more scattered. It doesn't have the continuity that either the SPX or the Dow have, but it still nevertheless is in a sideways channel. What is interesting to note, and I pointed this out last week, is the 200 simple moving average is sort of acting like a magnet. It does not really know which side of the Mason-Dixon line it wants to be on here. It broke down below there, it retested it, and actually successfully came back up through, spent about a week or so above, actually dipped down below for a short period of time, but about a week, and then it came back down again, and lo and behold, today it just closed barely above the 200 simple moving average today, so it really doesn't know what it wants to do with regard to the 200 moving average, which is quite unusual. If you looked at it from a longer term perspective, if we look at this a couple, 2-3 years from now and look back at this, we would probably view this as a hold of the 200 simple moving average if in fact it stays above, because most of the time areas like this are a zone necessarily. It doesn't move right to the penny, and this is close enough to consider this to be a successful hold of this area if it stays above. But right now we don't have the luxury of knowing what's going to happen in the future. We can only speculate, and I feel that it's going to remain in this channel being about 2132 on the downside up to slightly above 2300 on the top side. Now if it does break above the upper resistance line here, we do have this swing high from back here in January, and that's at 2325. We also have this little shelf here that appeared in March, and it's at 2400, and then we had another swing high that occurred right here in May, just above 2425, and then the top here, which by the way I think is a very, very strong top, because there's a lot of market symmetry going back on a 5-year chart showing that this area at 2535 is going to be a pretty formidable resistance if it goes up that far. We do have the low that's down here at 2100. We also have a Fibonacci, a 50% Fibonacci retracement at 2062. And then we have at 1900 a couple of gaps that occurred, one in mid-2008 and another in late 2009, early 2010 that we have to contend with on the downside if it goes that far. On the stochastics, it really isn't telling me anything. It's just oscillating right now, as is the MACD. It really is not anything definitive. So once again, to summarize, I feel that we're going to remain in this channel. It's probably going to continue to flirt with the 200 simple moving average until it really decides what it wants to do. I do feel that volatility is beginning to decrease, or at least stabilize somewhat, and I do feel longer term here within the next month or so it's going to move back closer to 25, 26 in the VIX. Must suggest to you that you remain nimble, because it is a very volatile market out there. Would suggest that you trade hedged and make sure that your position sizing and your diversification are in line with your risk tolerance. So with that, look forward to talking with you next week, and have a good week of trading.